Hello, traders. Um, had to change the name of the stream there. Apologize for the brief delay. But this stream is going to be a little different. I've had a lot of new people that I've met, and hopefully everything is coming through. I've had a little trouble with my streams coming through. So I'm going to check that real quick before we get going. Um, but yeah, it was kind of a wild and crazy week. I don't know if y'all have been watching silver at all, but good Lord, that thing is a beast. I've traded it a little bit this week. Yeah, it's looking like everything's a go on the YouTube channel, so that's good. Um, so I've had a lot of people that I've met recently interested in trading for whatever reason, and so I kind of want to go over if you're brand new to trading, what you can do to get started. The first thing I recommend doing is just going to TradingView. The charts are similar to TOPSTEPX, and I just do this with no, I don't pay for anything. It's completely free, and you can log in with your Google account or whatever. But what you can do on here is just learn how the market moves and how to place orders. The one thing they don't do is they don't do bracket orders. Whenever you click a button, it just puts your order in, and you have to drag your take profit and stop loss into place. That's really important. But this is just a completely free way for you to familiarize yourself with how to place orders, and which is pretty simple. You just click a button. Uh, on futures, you can sell short, or you can buy and go long, and so you can make money both directions. That's really a neat thing about futures. Um, I would say if you're just getting started and it's your very first time, I would say trade a bigger chart, like a 4 minute chart. I mean, a 4 hour chart or 1 hour chart, and just look for reversal patterns at the wicks of these things. That's that's what I would start out doing. Like you could even place limit orders or whatever. Um, but I'll also show you the reversal patterns that I look for. With the equities here lately, we have not been seeing a lot of reversals, good reversals in my opinion, and so that's why I've started looking at other products. But there's some there, but they're just not clean. They're not pretty like what I want to see. So I've been looking at other products. Okay, so let's say you get started, you play around in here. It's the free version. It's going to be a 10-minute delay. So a lot of times when you place your order, it may not be exactly where you want it to be, but it'll at least familiarize you with the products that I like to trade, and the ones that are available to you. And let's say you're doing that, you get some success. Um, you start to learn how to spot reversal patterns, or at least place orders where, like here from these wicks for run right here. And so this candle pulled back, so maybe you would put an order here to go long and just take your profit above the high of that 15-minute range. That's a good way to get started. Okay, and once you've done that and you're familiar with it, and you think, well, I'm doing okay with this, I want to move to the next level. Well, the next level is a prop firm. You don't want to put your real money into the market ever. I did it. I know a lot of people that did it. The average trader loses $10,000 of their own money in the first 6 months. I mean, it's just, you're going to lose. When you start, you're going to lose. It takes time to learn. It takes time to learn the emotional control, and that's what a prop firm provides. Top Step's lowest level is $50 a month, and that's just for a trading combine evaluation account, um, with a fee associated. So if you pass, you have to pay them another $150 to get your account funded. They also have a no fee option that's $93 with tax. That's also an option, but I don't recommend that when you first get started. Get in there, Once you got a little skin in the game, things are going to change. Your emotions are going to change. And so to get started with Top Step, you would need to go to their website, click on Earn Funding, and I recommend, it went straight to the, it went straight to the dashboard. I didn't want to do that. When you click on Earn Funding, it's going to give you options of which you want to buy. I recommend the 50K. It's the best drawdown for your money. I wonder if I log out of that, if that would do it. Let's see. Try this, log out. Yeah. And then maybe if I click on Earn Funding, it will actually pull up what I want to see. Yeah, there we go. Become a funded trader. You have to enter in your information there. I don't know if I want to go through all that. I don't. So once you enter your information, it'll pull up all the options, and you can either select a 50K with a fee or without a fee nowadays. So I don't know why this is saying dashboard. That's weird. But it's what Top Step does is it provides you a hedge of protection. You can learn from them, you can learn from me, you can learn from anybody on the internet, but you're only putting in $50. So it's not going to break the bank if you mess up, and you will mess up in the beginning. I promise you, you will. So you get into your combine, you start working the combine, and eventually, hopefully, if you stick with it long enough, you will get to where you can get funded, and you can literally, if you've practiced on the free programs enough, you can get into a trading combine and spend like $50 or whatever, and then your 150 fee if you want to do that, and you can actually get to any amount of money imaginable from that. If you've learned good discipline and emotional control, you can make tons of money. Um, you're not going to do it quick. If you do it right, you're not going to do it quick. If you do it quick, you're probably going to blow up your account. So you learn discipline. Top Step actually used to have a very good discipline model to follow. They truly wanted traders to learn how to be good traders. And so they set their program up to teach you how to be a good trader. You could not get funded in 2 days. You had to spend 15 days or something like that to get funded. Your goal was $3,000, and you could only make $250 a day. So however many days that works up to. But that was the way they started out. And that's actually the way everybody should start out. So they were trying to keep traders from blowing up their accounts by oversizing and trying to make a ton of money and get past these things in 2 days. That's the way they started, and that's the way you should start. The second thing they did is they had a daily loss limit, so you couldn't blow up your account in one day. And everybody was belly aching because the competition took all that out. So Top Step finally they removed it, and they put in an option where you can set your own daily loss limit. So now you're in control of your daily loss limit. Well, so all of that's been removed. You can literally blow up your account as fast as you want to now, and you can do it in one trade if you want to. And the personal profit target, I mean, for an evaluation account, the best day can't be more than 50% of all your days. So on a 50K, your target is $3,000. If you're going to pass in 2 days, it can't be more than $1,500. It can be a little more. I usually put it a little bit more. They give you a little bit of leeway on that. So that's one thing that keep in mind. It's better if you discipline yourself to take small wins, and $200 a day will change your life, and you can scale later on as you start making more profits. you can scale up, and maybe you do 400 a day or whatever. And then we're just talking average. Don't go in with the idea that this is, I'm going to make this, because if you only make 100 and there's no trade set up and you're trying for the extra 100, you could blow up your account, or you could lose everything you just made. So take what the market gives you each day. Don't try to force trades, and just start small and build it. If you can consistently make even 20 bucks a day, you can scale eventually. It's the consistency you want. And Top Step used to have that as part of their training program, but competition has come in, and some people view that as better rules. It's not really good, but that's all right. So now you're in an evaluation account, you pass it, and then you get a funded account. From the funded account, the rules are the same. You have to have 5 profitable days, and then once you get your 5 profitable days, you can request a payout. Now they have to be at least $150 each. So let's say you did that and you're sticking to your, as you were in your combine, and you're getting $200 a day average. Well, at the end of those 5 days, you would have $1,000. But that's all you have is $1,000. And if you take out half of that, then now your account's down to $200. I mean, $500. So it's not recommended. I don't recommend taking a payout at that point. Even though you're qualified and able, they don't give you that buffer. Once you take that payout, your zero is your bottom line. So you got $500 to trade with. It would be better to wait until you have more of a cushion before you take that first payout. Say if you got up to $4,000 in your account and then you took a payout of $2,000, then you would at least still have $2,000 to play with, keeping your size small. A month later, now you got $8,000 in your account. Pull out that $2,000 again, leave $4,000 in your account, and now you can scale up. So if you were trading one micro, maybe now you trade 2 micros, and now you're making 400 a week with the same risk settings, same everything, and so $400 a day average. So you can see how that would scale over time. And the other thing about this is, once you are getting consistent payouts, Top Step will let you have 5 accounts. So if you're making the $200 a day average and you're copying that, that's $1,000 a day. And then once we scale, this is like 2 or 3 months in, once we scale up to 2 micros, now we're at $2,000 a day. And you can see how this could become a very lucrative thing in a short amount of time. So definitely potential, but is it easy? No. I've tried to think about, what's the most difficult part about my journey, and definitely it's learning about myself, learning what triggers me, and what makes me go on tilt. I mean, I've had days where I have blown up and reset accounts. My worst day, I think, was 4 times I did it, or five total accounts in one day, was my worst day. And after that day, I mean, I felt like an alien had invaded my body and started clicking the mouse button for me. And so that was the worst. That was the most difficult part, the emotional part of the journey, is you'll start having some success, and then maybe you're overconfident or whatever, a mistake happens, and you lose your mind. It's called going on tilt, is what a lot of people call it. And you see it in a lot of different, you see it everywhere. I mean, it's just biological. Your body, whenever you get into a stressful situation, your body will trigger the fight or flight symptoms. So you have your amygdala thinks you're in danger, produces all the adrenaline and everything that you need to escape that danger. And in trading, the danger is losing money. And so you will either move your stop prematurely to prevent yourself from losing money, or you can just completely lose your mind and put on max size when there's no trade setup. There's a lot of different things that can happen on tilt. So that I would say is the most difficult part of the journey. Let's I've heard that I can teach you a pattern over the course of an afternoon, but learning the emotional control may take you your entire life. I've heard that said, and I believe that. Okay, so let's look at a pattern. This is silver. It's not the best for these patterns, but I want to look at it anyway. So this is the pattern that I teach, are reversal patterns. Why did that not just expand? There we go. So they're reversal patterns. Whenever we're going down in the market, it's moving down in legs. And I just did one leg, but there may be 3 or 4 legs where it's going down and then it kind of goes up and then down again. It kind of goes up and down again, but it's going down, clearly going down. And then it reaches a level. I've got it labeled sell side liquidity here. Why did that not pull up? Y'all can't even see what I'm pointing at. Let's add a scene. See if that does it. Nope, that didn't do it. Okay, you're not even going to be able to see this, so there's no point in it. I can draw it out. That's not a problem. So the market will be, I'll just point it out here. The market will be going down in legs, like it is here. And then it takes what the market views as sell side, not what you view as sell side. It could be anything. But the market takes what it views as sell side. So over here, maybe it's working into this little area here. And then it reverses. Okay. So the reversal is unique. What you need to see is the market to go up and then come back down, try to make a low, another low, push down again and fail. When it pushes down again and fails, like this one here, that's a liquidity grab. It didn't even take out this low. And then one more time, it tried to push down again. When you see that, and then it pulls away with what we call a fair value gap, like this right here is a fair value gap. When the candle wicks don't touch one another, right here, here's one, and then there's one. This area in between, this would be a bullish fair value gap right there, because there's no overlap on these wicks. If you see these others, they overlap. There's a small little bearish one there, small one there, big one there. That's the liquidity run. Well, so where these wicks, this would be your fair value gap. So when you see that, now you're like, okay, this looks like a good reversal pattern. So you could get in and you could aim for just the latest swing high. But with silver being the beast that it is, you could hold it a while and just see where it goes. You can see a very clear pattern of higher lows and followed by fair value gaps. If you didn't get in here, I think that might have got you stopped out. That's, yeah, 30 points. 20 points on one micro silver is $200. So it depends on how much stop loss you could endure, how much loss you want to endure. But this one on Friday moved $4. And that's about $4,000 on one micro silver if you didn't add any on the way up. But it was, up and down, up and down, up and down most of the time until we got up here, and then it kind of just went up, 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 up. But getting in here, if you didn't get a perfect entry, it was very easy to get stopped out, because this is a big move. That's 36. This is 68. So that pullback right there, about $600 on one micro silver. It's a lot. It's a lot. So, but anyway, if you got in down here, you were able to get in on maybe one of these pullbacks, or even here in this fair value gap right here that I just marked out. Like this, a lot of times when a fair value gap is made, the market will come back down to it. So you could even try to get in there, or even here. Once we've made this, we broke that high. That's called the break and retest. So we broke this level right here. So we broke it, and then we've retested it several times, and then we went ahead on up. So getting in there or in this consolidation at the bottom, that would be a great place to enter. You could have stayed in the trade there and held it for a good long while, or just to that high. Would have got you. I think I actually got in there and I made about $400 and called it a day. But you can see I left a lot of money on the table. $4,000 move. But so that's what we look for in this. We look for the market to push down, fail to go any lower, attempt a couple of times, maybe just one time, but a lot of times it will attempt to go lower and fail, and then pull away with a fair value gap. But we want to see it go up like that and leave the most recent swing high. It took this one, but it left that one. So we want to see it go down and then try to push down lower, leaving the liquidity above, and then run for it and get in that move to it. That's the idea behind this reversal trade. So that's silver. Gold did not do quite as well yesterday, but it did have some patterns here. You can see that one right at the tail end of the day. Higher low, tried again, pulled away. There's a small fair value gap there, I think. Not really. I don't know that I would have entered that just because it's the end of the day. Gold trades differently than other products. This is our highest high. We pulled back. We tried to push higher, failed, and pulled away with another fair value gap. So our entry could be there. And then we would just aim for the most recent swing low, which would be here, or even one of these. And of course, it got it right away. Gold was extremely bullish, so I wasn't really looking for shorts. I don't believe I caught any of that. But yeah, an entry right here would have been a great one. That would have filled you or tested your entry, and then you would have to endure a little bit of chop as it went down there. And this is on a 1 minute chart, by the way. It's to see the fair value gaps, I go to a smaller time frame. But it was super, super choppy through here. It would have been hard for me to take a trade in that just because of the choppiness. It's just so rangy right there. So it was not a good product to trade yesterday. It is in other days. And then ES was also trash yesterday. The regular trading hours. I mean, we did eventually push down here, try to push lower, fail, pull away with a fair value gap. That's your only liquidity you could aim for right there. And yeah, that wouldn't have stopped you out. There just wasn't a lot of movement to take advantage of on a day like yesterday. So the equities have been pretty rough for reversal trading. I'm going to go to regular trading hours only, and we'll look at this day right here. Let's see, this day right here. So this is for a continuation day. Okay, so the market opens here and it pushes up, runs what it deems as liquidity, and then comes back down and runs these lows, but it fails to make a new low here. We pull away with a fair value gap. That's your entry. That's your break and retest right here. And then you just hold on tight and see where we go. That's a directional day entry. Shortly after the open, this entry would have occurred right after 10 o'clock, which is good. And then we just ran the rest of the day. If you didn't get in there, then you were just, sitting on your hands. You didn't trade ES that day. And then the next day, similar. We opened here. Let's see. We opened right here. Look at that same PD array there. We opened right here. We pushed up. We took what the market deemed as liquid. There, here we left that high. We came down, pulled away with a fair value gap. There's our entry. And we went up the rest of the day. No reversal pattern really to speak of until the very, very end of the day. Well, it says 1:12 p.m. Yeah, here would be a decent little reversal pattern. We push down with fair value gaps, and then we try to push higher and fail. You could enter there and aim for that. I like to see it push a little higher, but that one would have been okay because of the the length we push down. When we go back up and we fail to make that new high, you could at least go for this low hanging fruit there, and you'll get it most of the time. So that's ES. NQ, I didn't even look at it this week. I've divorced NQ. I'm sick of it. I've been getting my butt handed to me too many times. But you can see that pattern here where we actually pushed down and we took liquidity, and then we came back up and made that lower high. But what are we aiming for? That would be this liquidity here. We just consolidated the rest of the day. So I've been leaving NQ alone, but it does have a similar pattern. I think that's a new, yeah, this is the beginning of a day. But see, it opens, goes up, takes whatever liquidity it deemed, and then made a lower low where ES did not. And then this next push down did not make a new low right here. See how that was higher? And then we pull away with a fair value gap. That's your entry. So we pushed up, leaving liquidity, push back down, leave a higher low, and then we pull away with a fair value gap. So that's your entry right there. You can aim for at least that high. Maybe if you put on a couple of micros, you take one off there, and then you just hold it and see where we're going. We ended up going up quite a bit that day. You could time stop that as well. Entry on that one was right at 10 o'clock, just shortly after, right here, around 10:30. That's New York time. This is the previous day. We open, we push down, we go back up, and we fail to make a new high, and we pull away with a fair value gap. You can at least aim for that low. And that would have got you quite a few points. So that's the market structure we're looking for. I actually have a nice little drawing. So you'll have to go back to that one I put on about micro silver, I guess, because that's the one that has the deal. I can't get it to pull up on the live stream for some reason. Normally, anytime I click a new window, it'll pull up. So I'm not sure why it's not pulling up now. It's just showing the only the one I've got here. Let's see. Select a display to capture. Let me. Does that show it? No, that's not it. There. Okay. So now it's doing it, display. So there, we'll blow it up. You can see it. Take a screenshot of this because that's what we're looking for each time. Market pushes up, finds whatever it deems as buy side, makes a lower high, pulls away with a fair value gap. You aim for at least that swing low, could go lower. Maybe you put on 2 micros or 4 micros, take off a couple there, let one run. That's my best advice there. If you're brand new to trading, you don't know what a micro is or a big contract. NQ has 2 sizes. The mini is the big contract, even though it's kind of weird because it's a mini. Years ago, trading these things was only available to very, very wealthy people. And they created the mini to make it more accessible to retail traders or people didn't have quite as much money in their pocket. And eventually they did away with the original contract. And so the mini now is the big contract and the micro would be the small. So for NASDAQ, it's NQ and MNQ. You can see right there, MNQ. And for gold, it's MGC or GC. For silver, it's kind of weird. It's SIL for the micro and SI for the big one. And for ES, it's ES for the big one and MES for the small one. So if you're brand new, that the ones I typically trade, because the equities have been so, the equities would be NASDAQ and ES or Dow or even Russell, M2K, Russell 2000. Those are the equities. And because they have, in my opinion, not been giving me the signals that I want to see, I've been clicking through and looking at other products. I'm just going to get rid of all these lines. But the way you can do that, you get on a higher time frame. And this is a 1 hour chart. But you can see that's just leaving gaps. I mean, to me, a gap fill is like a 70%. We got gaps everywhere that aren't getting filled. It's just the equities are not following the rules. They're leaving gaps in the market everywhere. And historically, these gaps have a 70% chance of filling that day, at least halfway. And we're not even dipping into them. So that led me to start looking at other things like silver and gold. The way you can do that is you put on a higher time frame, like silver, man. It's just been ripping. I mean, ripping higher. It does have a few little pullback days, but you put on a higher time frame and you just look. You can just click through all of them and look. Have we taken out a recent swing low like right here? We did. So possibility going up and taking that high is definitely there. So you can just kind of do that. Put with get silver and gold, they don't trade on the same time frame as the rest of the market. They open at 8 in the morning and close at 12:30 in the afternoon. So they trade a little different. You have to use extended hours on them. But like silver here, it opened with a gap up and didn't even attempt to fill it. You can see how it pulls down here and then makes a higher low. That's your cue to enter on these. When it's a directional move like that, it a lot of times won't take out the low. It'll take out a recent swing low and then continue higher. And that's what it's been doing. We haven't had a big dip in silver. This was a pretty big dip, but that's the only big dip. This is a one. These are 1 hour candles. This day struggled to go much higher. Left this liquidity, went on up. So when you see on a higher time frame that we're making higher lows, just try to find a place to get in at a fair value gap and hold your breath, because it could rip like that for you real quick. And silver is very difficult. One micro silver trades about the same as one big NASDAQ, believe it or not. Maybe not quite that bad. Maybe it's like 5 mini NASDAQ, but it is a freaking beast. So every penny silver moves, every penny is $10. And we went up $4 on Friday. So you do the math. Gold's a little friendlier. If you do one micro gold, it's I think it's like $2 for every tick, a couple of dollars per tick. So it's going to trade similar to NASDAQ as far as the price, amount of money you can make on it. It's going to be real similar. It can be very erratic. It gets into these ranges and it's just chops around. This is a 1 hour chart here. And you can see gold has not been quite as bullish as silver, but we did have a pretty decent day, pretty decent run up here. That doesn't look like a 1 hour chart for gold. No, that's crude. That's crude oil. Crude is the choppy as all get out. So that CL is crude, MCL is at micro crude. And I mean, this is a 1 hour chart. You can see we're making lower highs, lower highs. I would say when it tests one of these, and fails to make a new high, you see that you could go short, like maybe on this pullback here. Just when you're just glancing at the charts to see if there's an opportunity for that product on any particular day, you would look at something like this. We're in a nice little consolidation. We run the high and we start pulling away. Trying to get an entry somewhere in here would be really good. And you could just aim for that low, or anytime you see a straight line on the charts, that's a good place to enter, to aim for your take profit. And that's a nice straight line right there. And that's right where we went. But just as you're going through each product, you're just looking for something on the chart that looks like there could be a potential reversal there, like this right here. I see that. I'm thinking on Monday, we could pull back at least half of that run. So, or whenever crude opens on Sunday, even Sunday at 5. That's another thing. If you're new to trading, you need to know. Futures market trades from 5 p.m. until actually 4 p.m. But on Top Step, you shut it down at 3:10 Texas time. So 5 p.m. Central Standard Time to 3:10 p.m. is our trading hours. So you can take a trade as soon as the market opens at 5. You can leave it on all the way until 3:10 the next day. And so that's called the Asia session. So you can literally trade this product 22 hours a day if you wanted to. I don't recommend that because your brain will get fried. I've tried it. But just looking at that, we took this nice little straight line. Crude overall has been going down, down, down. We took a low here. We came up, we made higher lows, we pulled away, and I'm sure these are 1 hour candles, so I'm sure there's some fair value gaps along here. That's if we break and retest and continue lower, then we're just going to come after these. But if we reject here and we start going back up, I mean, getting at least to the middle of this range, possibly even taking out these highs is a possibility there. So watching that on Monday is something or on Sunday night, that's something I'm going to be looking at. And that's the way, as you're just clicking through the charts, you just see, well, did we just take out a recent swing low? I mean, that looks like a liquidity grab to me. So maybe we reverse there at least a little bit, and there's some opportunity there. You can do that with any of these products. This is the Australian dollar. Look at the configuration here. We came down. We made a low. The market, oh, it swept these lows. Okay. We don't know where the market is going to deem liquidity. So we just watch for this reversal pattern, the shift in market structure that I highlighted here. This is a shift in market structure. So that's all we're doing. We're looking for products that have that shift in market structure. And here we go. We were coming down in legs. We pushed up. We took that liquidity. We came back down, tried to push lower, but we failed. And then we started pulling away. So that's our next liquidity grab right there. And you can see we made it. Maybe even take that one. This was over the course of several hours, so I don't know if you would have got that all in one day or not, but you definitely could have gotten in and got some money out of this product. Now this one trades at $6.75 a tick or a point, whatever it is. It's kind of ambiguous because it's such a small number. Point, it goes all the way down to a thousandth of a cent, but I think it moves in half-cent increments. $6.75 per each, and they don't have micros on these. The British pound. So you can see the British pound has been consolidating up here for several hours. These are all out 1 hour candles. But we've made a higher low, we've made a lower high. That's not a tradable product to me right now. You go to the Canadian. Oh man, we ran some liquidity up here. Is this the highest it's ever been or what? No, we ran this liquidity from way back over here and we pulled back. So what would we be looking for here? This is a possibility on Monday that we could, or on Sunday night, that we could work up into this. That definitely looks like an exhaustion candle to me. And then maybe we aim for these lows right here, or possibly even middle of this run up right here. So that one would be one I would be willing to watch because we have an exhaustion candle and now we've come back. It could also be a break and retest. We broke, maybe we retest this consolidation and we continue up. But we definitely ran some liquidity. These are probably daily, weekly highs right here. And we definitely ran those and pulled back. So that one would be one that I would earmark for a possible trade on Monday. And this is only when the equities aren't behaving, and they have not been behaving. So there's no sense in sitting there on your hands trying to force a trade in a product that's not giving you a good trade setup when you can click through here and find something that is. This one, pretty rough consolidation. Um, I would have to see it break that before I would consider it to be ready for anything else. That's corn, by the way. Mexican peso. It's kind of going up and up and up, which is interesting to me. Let's see here. We zoom in on these 1 hour candles here. Yes, that one took it. That could possibly be considered a lower high. We could start offering and maybe take out some of this. But we're kind of falling into a little bit of a consolidation, like it may be finding a top, but it could also continue up. It's a little ambiguous to me right now. Possibly watch it for a small pullback down around this area. I don't know what these trade for per tick, but I think it's around the same as all the other currencies, which is around 675 a tick. New Zealand dollar. So the New Zealand dollar, this is a little ambiguous because, well, we did run that liquidity, but right now we've made a higher low. If it was to push and break this level, then maybe we'd have an opportunity to go to this level here or that level there. A lot of times when you see a big run up like that, and we did take out the same kind of highs we did on that other product we just looked at, you'll pull back about halfway of that run before you continue up. So there could be an opportunity here on Sunday to aim down this way. Let's look at the Swiss franc. Kind of has the same type of PD array what we're seeing on the others. A lot of times you'll see that in the currency. And crude oil, that's that one we looked at earlier. It's pulled back half of this range, so we could possibly see a bounce on crude. The euro, real similar to what we're seeing in the others, almost made that high. Wouldn't call it an all-time high, but we are making some lower highs here, so possibly aiming down. It's kind of like in that big range there. Yeah, it's a coin flip to me. Maybe if we went down to like a 15-minute chart or something, maybe you could see a little more detail. It ran that low. That's a no trade situation for me until it moves out of that area. Let's look at lean hogs. Lean hogs. So they're making gaps down, trying to fill the gap, another gap down, fill the gap. So that's kind of weird. We open with a gap down, we push back up to almost where we traded before. That's definitely showing a bit of a downward trend, but the day movement is upward. Kind of weird. Kind of weird. Here was up, 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 up. So let's go back to a 4 hour. Did we sweep some highs up here? Kind of looks like we did. And then we started gapping down. They trade weird hours. I don't know what the hours are, but a lot of times I'll see it and it's red. Like you can't trade it right now. It won't even let you click on it. We were in a really big 4 hour range here. We broke above. We kind of come down and retested. filling these gaps is a possibility. That might be something to watch for lean hogs, and I have no idea how much it trades. I'm just looking at charts and saying, well, which one of these provides an opportunity? Because this little situation works on all assets, even stocks. If you trade, if you got a big pile of money and you're trading stocks, it'll even work on that. That's what we look for on any of the asset classes. You could even look at this here. Well, it just opened straight back up. So I don't know. You could get it here. Um, Maybe on a 1 minute time frame, you may be able to see it, but you will see a push lower that fails to go lower, and then a pull away with a fair value gap. Entering in that fair value gap, like that break and retest would be right here. And here we go up. Same way on the way down. We fail to make a new high. We pulled away with a fair value gap. That would be our break and retest. Man, you could have made a lot of money on lean hogs that day, or that several days. That's 4 hours. And where'd it go? Swept liquidity right back up. We're at half the run now, so maybe we push back lower. Hard to say. Lean hogs. Copper. You'll never take me alive, copper. It's kind of going with all the same way as the other precious metals, gold, silver. Platinum's probably looking about the same. So these, I mean, try to buy a dip and hold on tight. That's all I can say. I don't know if copper has a micro. I don't see one, and I don't know how it trades as far as like price per tick or anything. That would be something to get into the practice account and click on. Heating oil. Ooh, interesting. We're heading into wintertime and the price of heating oil is going down. Why is that? Seems like demand would be high. Mm-hmm. So looking at heating oil, we went up and we peaked in November. We're coming back down. I see a low right here that could be targeted possibly, or we could be making a higher low. Just looking at those candles right there, I think we're probably going to push down. But that's an interesting area to watch. If we take this and then we start working our way back up, that would be a reversal that I would be interested in possibly getting involved in. I don't know what this one trades per penny or anything. If it's anything like crude, on a micro crude, it's about $1 for every penny. So it may be similar to that. Live cattle. Consolidation, came down, came back up, consolidation. Could go either way. Not tradable at that point. Not something I would want to even watch. The Russell, is it doing any better than the other equities? It doesn't look awful. This 4 hour chart kind of making its way down. It seems a little bit more bearish. Fair value gap 4 hour to the downside. We just swept these two wicks. So it could go either way. This could be the pullback to half of that run, and now we go up. That one might be worth watching for a run on these highs right there. Relative equal highs on the 4 hour chart usually get targeted. Let's Aussie US dollar pair. Hmm, not seeing anything I like there at all. It's just a consolidation. British pound, US dollar pair. So this would be like your Forex futures. Well, that's just the micro British pound. So these are all dollar pairs, and that one's showing a little bit of downside on the consolidation. Bitcoin. This is micro Bitcoin. Man, 4 hour chart is just a straight consolidation. You could trade this by possibly trading the range. Overall, I think Bitcoin has been bearish, so you'd want to enter at the top of the range for a short, most likely. but I would leave that alone completely. I wouldn't even mess with it until we take out one of these lows and put up a reversal pattern. I mean, you could technically say, oh, well, we took out a low, we've got a higher low, and aim for one of these. You could do that. But Bitcoin, to me, it's a hands off. I don't touch it. I know a lot of people love it, but not me. There is a micro copper, so you could trade copper possibly. I don't know what it trades per tick, but this is one you could definitely make some money on if it's a little more friendlier than silver. I would say jump in, buy pullback. The precious metals are just going up and up and up. Natural gas. Now that thing ought to be bullish for wintertime. I used to trade it a little bit, so you still got lines on there. I'm gonna get rid of them. We've been pushing down. And then we found a bottom, took out that low, higher lows, pulled away with a fair value gap. And this is a 4-hour chart. So right now we are in a consolidation. I would want to see a break and retest of that area if we're going to push higher. I don't know what this one trades per tick. I used to know, but I don't anymore. Those are wicks. Yeah, I deleted all the lines, so those are wicks. That's weird. It looks like it can be pretty volatile some days if it's putting up a wick like that. We took these lows. I don't know. These are 4-hour candles, so it really didn't move much over the holidays. But this right here would be a possible take profit if we do pull away from here. Like if we break and we come up and leave that high, come back down, retest this area, and then continue higher, that would definitely be a point of contention right there. Let's look at, I want to show you Nikkei's nasty. Platinum's doing the same thing as all the other precious metals. And I think we have a micro platinum. It's tradable, definitely tradable. Um, mm, oh, it's way up here. I already had it starred. The yen. Okay. When this got taken, I went long on the yen, and it's at 675. I think I made about $800 on this sucker overnight. Now we've come back down, and we're in the middle of this range right here. The yen is currently trading less than the Mexican peso, and I mean dollar average to the U.S. dollar. I don't know that we the Japan economy is that much lower than the Mexican economy, but you just got to go with what you're seeing on the chart here. So here we consolidated, we pulled back. We definitely are taking this. This could be considered like a break and retest area because we did kind of poke up after that. So I'm going to be watching the yen to see if we start pushing our way back up. Because this isn't a real decisive move down. You can see every candle is back and forth, back and forth, back and forth. So it could continue down. It could fill this fair value gap, maybe even offer to this one. But it's one worth watching for a bullish move back up to here or possibly the highs of this range right here. Because we definitely swept the low. So we still have to wait to see if this is going to be a higher low and then we run, or if it's going to be making a new low. We don't know yet. Interesting. I guess that's it for those. If you're a Nasdaq and you're an ES trader and that's all you do and you're struggling with it or whatever, go through. I mean, the PD arrays are going to be the same no matter what. You go to a 5-minute chart, they're going to be the same no matter what. They're going to look just like what I showed you on that chart. The market's going up in legs, it comes back down, it goes up, fails to make a new high, pulls away with a fair value gap somewhere in there. This is a 5-minute chart, but It'll pull away with a fair value gap. We aim for the most recent swing low. We get it right there. And then it rips right back up and takes out that high. This is not tradable, but this move down is tradable. If you got in somewhere around here, this would have made you sweat a little, but you would have got your take profit. At least this one. I don't know if it got that one or not. But once we took that high, what did we do? Lower high, lower high, try it again, lower high, pull away with a fair value gap. Entry there. Where do we aim? How about here or there? How about the most recent swing low and leave one running? The PD arrays are the same. It doesn't matter what you're trading at all. Crude's a little more choppy, at least in that consolidation it was. But you can find stuff in every one of them where, like this would be like, okay, I'm in ES, I'm NQ, that's all I'm watching. And there's just nothing there to trade. I'm not seeing anything that I like. Then start flipping through other things. The only thing I see here in crude that I kind of remotely like is we got this low, higher low, higher low. Then we took out that low. And then we came down and took out all of these lows. And then this right here, we came and took out the high of that range, pushed down, failed to go any lower. Right there is the only place I see you could enter. But would you with all of this chop? I don't know. I think break and retest of this right there is the best entry. That break and retest is really important. We break through an area, we come back down, we don't penetrate that high. That's a really good, usually a really good trade, and you just aim for the most recent swing high. So, regardless of the asset, price moves the same. On reversal patterns, it's going to move the same. I tend to complicate things. This is micro gold. We looked at it earlier. But you can see on the 5-minute chart, we came down, we swept this liquidity here, but then we came back up and we failed to make a new high. And here we go down, we try again, going down again. Entry here, take profit there. Boom. If you're new to trading, you can use that and you can become a millionaire with me as soon as you get a hold of your emotions. Because that's what I struggle with the most is my emotions. I'm going to have to end the stream there. If you wanted to start today, I would say sign up for a free paper trading account here. Start clicking those buttons, watching how the market moves, and then get yourself ready to start a TopStep account. I'm not affiliated with any of these people. I like helping people become successful at this because it's just a passion of mine. So hope y'all have a good weekend.